Let's begin with chapter 1, Accounting for Partnership Firms Fundamentals. The terminologies partnership and firms are very important to understand. Let's see what is a firm, who can be a partner, and what is partnership firm. What is a firm? First of all, collectively partners are known as firm. Collectively. Next, who can be a partner? Any person with a sound mind. Sound mind means a person who can make the rational decisions can become a partner. Next, what is partnership? Partnership is a relationship between the partners, right? So it's a relation between the partners. Let's understand. As per the Partnership Act 1932, the partnership is being defined as the relationship as a relation between persons who have agreed to share the profits of a business carried on by all or any one of them acting for all. The features of this partnership firm, let's say, the first, economic relation. Economic relation says that there exists a profit and loss sharing ratio between the partners. Whenever there is a profit or the firm incurs losses, they have to share the profit or loss both in a particular ratio. The agreement is the second feature of the partnership firm. Next, the written or oral, both agreement are valid. Written is actually which helps in avoid the conflicts between the partners, that's why it is always being preferred, whereas oral is also valid and can be enforceable by the law. So both agreements are valid. Next is number of partners. Number of partners, minimum 2 are required and maximum, as per the Companies Act 2013, there should be 50 members maximum. It is not being defined by the Partnership Act, but there is a reference as per the Companies Act 2013. So maximum number of partners can be 50. The next feature of the partnership firm is there should be a profit motive. Whenever a business is being started, there should be a profit motive. If it's for social welfare, we'll not be taking it for the partnership firm. Next is business can be carried on by all partners or can be carried on by one partner. It depends that all partners are giving capital or one or two partners are managing the business, or sometimes one partner can also manage all activities of a business. Next exists a relationship, agency relationship between the partners. To understand the agency relation, the two partners acts as a principal. They act as a principal as well as agent. All partners cannot be present in all meetings or in all contracts. So when one partner is representing another, he acts as an agent and he is following the guidelines which are being given or discussed between the partners. So the one who is not present in the meeting acts as a principal because he is being binded by the act of the agent, and the one who is representing the partner who is not present in the contract meeting or when so he is actually acting as an agent because he is following all the guidelines which are being discussed with the another partner who is not present in the meeting, right? So there is a principal and agent relation between them. So principal is always binded by the acts of the agent. Next, there is no separate legal entity, means the partners and the firm. Partners and the firm, they are being considered as one entity. There is no difference between the two because the liability which are being taken by the firm are to be paid by the partners also. Next is unlimited liability. Unlimited liability means if the firm at any point of time becomes insolvent. Insolvent means not capable of paying its liabilities. At that point of time, the partners, they have to pay the liability of the firm from their personal assets. right? So here the personal assets of the partners will be utilized to pay the liability of the firm when the firm becomes insolvent. So these are the basic features of the partnership firm. Next, let's move on to the rights of the partner. There are different rights of a partner. All partners have the right to conduct the business. The partners' decisions are taken collectively. Next, the share partners always have the right to share the profits and losses as per the decided ratio of profit and loss, right? If the ratio is not decided by them, it needs to be a equal one, right? So the profit and share will be shared equally by the partners. Next, they have the right to inspect the books of accounts to find out whether all the entries are being made properly. Plus they have a one more intention to detect if there are any frauds, right? So they have any point of time they can go and check the books of accounts. Nobody can deny them. Next, whenever the matters of the business are being discussed or decided, all partners needed to be consulted. Even if there is one partner is not present for one or the another reason, still he should be provided with all the important informations regarding the matter. Next, partners needs to be indemnified. Here please understand, indemnified means the compensation be given to the partner if he has paid any loan or has paid any liability of the firm personally, right? So if suppose the firm was not capable of paying at any point of time and the partner has paid the liability of the business, later on the business should compensate exactly the same amount which is being paid by the partner, so he should be indemnified with the same amount. Next, any partner who is not wanting to continue with the partnership firm, he can retire by just giving the uh, notice to the other partners. He can retire from the business at any point of time. Nobody can make him continue. It's his decision, and if he has taken the decision, he can retire by giving the notice. Another one, the partners sometimes provide loan to the business, right? So if the loan is being provided by the partner, he should get loan interest at the rate of 6% per annum. This is as per the Partnership Act 1932, right? Minimum 6% be given, but if the partners have decided, all the partners have decided that the partner be given 10% interest or by 15%, whatever they have decided, the interest can be given more than 6% also. So they must decide. Next, any partner has the right to say no to the admission of a new partner. It means every partner's consent is required, right? Means all partners give their agreement for the admission of a new partner. If any partner is not agree, if he says no, then a new partner cannot be admitted into the partnership firm. With this, I hope you have understood the various rights of a partner. We'll see you next time. Bye and take care.